Hello and good morning. Just after 11 o'clock here in Portugal. Munson here with the Money and Finance for Expats podcast. Wouldn't be complete without Matt Penfold here. Good morning to you, Matt. Over there in Spain, I believe.
Good morning. Well, I'm in Gibraltar. I'm in the
Oh,
office
you're
in Gibraltar.
in the office, yeah.
Although I live in Spain, and I always wish you good morning, Carl, but it's just ticked over into afternoon here.
Nearly
Just
time for a siesta then, isn't it? We're lucky to catch you.
exactly. Yeah, I was just dropping off then, Carl. So it's good timing.
Okay,
Yeah.
all right. Stay with me, Matt. Stay with me.
Yeah.
Today, choosing a financial advisor, what to look for in the process there to get yourselves the best wealth management and financial advice. That will be going through that this morning, but not until we've taken a quick look at the bigger picture, the global finance picture. What's going on, Matt?
Yeah. So I mean, those who tune in regularly will notice Paul's not with us today, and Paul often likes to introduce his graphs and technical charts and other kind of leading indicators that we see. It will be a lot more watered down today. Um, and I guess because we are introducing these weekly updates, we can't deliver breaking news every week. But
Yeah.
I guess the key this week is the inflation data that was released yesterday.
Mm-hmm.
So the CPI data, and most importantly in the US. So that came out as 6.4%. So people are celebrating. It's gone down again, ever so slightly, compared to the year on year that we had in December. But we have to bear in mind it's still inflation from a year ago of 6.5%,
Mm-hmm.
and the month on month inflation um, actually rose in January by 0.5%. So although inflation is going down year on year, it's still there. The cost of goods and services are still well above what they were a year ago, and that's going to drive a lot of what's going to happen in the markets for the rest of the year. We mentioned that before, and that remains the case. And the key kind of interaction is the Fed. And we say this every time we talk about the Fed. We're referring to kind of central governments, but the Fed in the US leads the way, and then everyone follows. I think there's that saying, isn't it? If the Fed sneezes, the rest of the world catches a cold,
Absolutely.
sort of thing. But so really, the inflation data and how they're able to control that will kind of dictate what will happen with interest rate rises. And we had a small increase last time out. The markets ideally want to see interest rates peak and then start to come down.
Yeah.
That'll be a sign that inflation is under control, but also reducing interest rates will work well for the markets. But this data was slightly higher than was expected by the markets, but only slightly higher. So it seems that we're on the kind of same course that we were before this, and is really on the Fed to see how aggressive they want to be, to control the inflation. And the key that they look at is what they call the super core services inflation. That's what the key metric that the Fed look at, and that excludes food, energy, and shelter, and these are the areas that are really kind of pushing up inflation at the moment. So the super core is at 4%, so that's lower than that 6.4%. But of course, it's still a lot higher where they want to be. They want overall inflation to be at 2%, and we're a long way from that as we stand.
Yeah, absolutely. And it's so interesting. I think we touched on this last week. This idea of disinflation and deflation, and how it's being reported that inflation is coming down, when in fact it's coming down in quite tiny increments, isn't it? And it's still actually intrinsically very high.
Yeah, absolutely. And I remember it was the latter part of last year, maybe October, and it was when inflation came down, but it came down a couple of percentage points, and it was still incredibly high. But the markets reacted, and everyone's right, inflation is over. No, it's not over.
Incredible,
Okay,
isn't it?
it's still there, and a lot of the reasons for it is still there, and Paul reported last week about the jobs data in the US is much higher than they were expecting. Um, so yeah, we've still got a long way to go, and you're right. Yeah, inflation is coming down. We're exactly where we want to be. No, we've got a long way to go,
Yeah.
if they want to target back to 2%, that's a long way to go down, and it's not going to happen overnight. So um, yeah, time will tell with that, and I guess in an ideal world, everyone wants inflation to drop down to this target of 2%, but that's unrealistic, and if we wake up tomorrow and inflation has gone down to 2%, then something's caused that, and there's going to be kind of problems in other areas. So it needs to be a soft landing. It needs to come down marginally, and
Mm.
the Fed need to manage that as best they can.
Great. Okay. General picture, general outlook there. Can I just ask you very quickly before we move on to choosing a financial advisor? Do you have a particular favorite area of the stock market you look at, or particular stocks? 'Cause the reason I ask is because is it that new chat, that new AI thing has been launched in Portugal as a subscription
Okay,
based service. Google launched their equivalent of it called Bard, I think,
right.
and their stock crashed shortly afterwards because in their demo of it they produced a factually incorrect answer in the demo, which sent a shockwave and brought their stock price down. And this is
Yeah.
how sensitive and fragile these markets are, isn't it? And quite rightly so. In that instance, the product didn't work. But do you have a
Yeah.
particular favourite that you look on, or are you more of a generalist?
No, I mean, you mean a particular stock or a
Yeah, yeah.
particular
Well,
indice?
a sector, really.
Not really. I mean, we want to look at all the sectors. So for just a kind of general overview, you look at the indices. So the S&P 500, the Nasdaq, which tends to be a lot more volatile because it's a lot more kind of tech heavy, and then the European markets. There's the DAX. We're dealing with mainly Brits, so they're kind of drawn to the FTSE. The FTSE is an interesting one because the FTSE 100 is out of all the indices has performed the best of recent times, and it's actually at kind of record highs. And so people say, oh, but the UK has got such a strong economy, the FTSE 100. But that's not the case. The FTSE 100 generally consists of companies that are doing their business outside of the UK, and they're performing well, just mainly because the sterling is so weak. So when they're kind of exchanging back in from where their earnings are coming, their profits are much higher. So if people want to get a more realistic idea of how UK companies are doing, you're better off looking at the FTSE 250, which are the kind of next level down, or they can even go lower. Look at the AIM stocks or things like that. But no, I mean we look overall. That we're very positive about precious metals, industrial metals as well.
Mm.
So we monitor those closely. We of course have the portfolios that we manage for our clients, so we have individual funds that we hold within those, and of course they're on our radar daily more than others. Um, but I guess in our position, you can't really afford to say, "Oh, we just monitor this and not this." We have to cover it all.
Yeah, well said. Okay, it was a chat GPT that was launched
That's
in
it's taking over the
all the
world, isn't
rage,
it?
isn't it? It's all the rage, and quite controversial as you'd expect as well. And 7.5 lost off Google's stock market value after their promotional ad showed the program giving a factually wrong answer to a question posed. Whoops, heads probably rolled with that, didn't they?
Absolutely, yeah.
Okay. Talking about heads rolling or not, as the case may be, choosing a financial advisor is our specialist topic today here on the Money and Finance for Expats podcast. We already had a question about this. What if you trust yourself more than a financial advisor? That turns out to be a better question than that sort of the cheeky quip it was originally intended, I think. Ultimately, you have to make your own decision, don't you? And rely on your own intuition and trust. A very important part of this process.
No. I mean, trust is key, Cole. Really, really important. And if you don't trust your financial advisor, then maybe you shouldn't
How
be
can
using
you
that
trust?
financial advisor, really, because that's what they should be offering you. But the question, so the question is, what if I trust myself more than the financial advisor? But Cole, I don't know my doctor very well. I trust myself more than my doctor. But you know what? If something goes wrong and I need surgery or I need some tablets to take, I'm going to kind of trust their judgment. So we,
Absolutely.
we we need to kind of consider that as well. But no, I think there's a lot of kind of factors to take into account, and we want to kind of address this from an independent point of view. We're financial advisors, so it's easy for us to say, look, we're the guys you should speak to.
Mm.
But that's not what we're attempting to do here. We see many things being part of the industry and practices that we don't agree with, and people operate in certain ways. And our aim is to highlight those, make it out in the open, and those people operating those bad practices, people shouldn't use them. Then if they use someone like us, or there's other good firms out there, that's what you should do, really. But from my experience as well, and you know, as you know, Carl, we specialize in Brits coming to Iberia. In the UK, the financial industry is a lot more robust from kind of regulation and how you operate. Whereas in what could be deemed a kind of offshore market is not quite the same. Now they've tightened it up a little bit more, but there's a lot more, for want of a better word, kind of cowboys, and there's a lot more kind of room to operate in a certain way. I mean, we talked about the Spanish and Portuguese bonds last week,
Yes.
and we talked about the difference between fees and commission. Now, in the UK, commission is banned. In the offshore market, these advisors can still take their fees as a commission, and they take their fees as commission because it's hidden, it's disguised, and because they can take a lot. So when we answer the question, choosing a financial advisor, what to look out for the process, that is one of the key components. You should only work with a financial advisor who's operating on a fee-based model, not a commission-based model, and get them to confirm it in writing. Anything that you're unsure of, always ask your financial advisor, okay, confirm this in writing for me. If they've
Right.
got nothing to hide, they will always confirm that in writing. They should do when they issue you a letter of advice anyway, but always err on the side of caution. And Carl, we always talk about, because we're in the same position, we're expats, we've come across, we've been through that process, and we understand the excitement of living here and the greater lifestyle, and you want to focus that. And I think for that, because of those reasons, people take their eye off the ball a little bit, and maybe become a bit more trusting, or they don't know the system as much, so they may say, I saw this person online, I'll just go with them. So and so down the pub recommended this. I mean, a recommendation is great. If you have someone you trust who's
Mhm.
worked with someone, and they can recommend them, that is great. um, One thing that we do see sometimes, I see this a lot in Spain, Carl, you can tell me if this happens in Portugal, is you get certain professionals who want to refer to other professionals
Oh
for
yeah.
maybe not the greatest reason.
Yes, yes, yes.
So
Definitely.
the lawyer wants to say, oh, you should use this accountant, the estate agent says you should use this lawyer, and
That's the
maybe
classic.
because they've got a nice little agreement between themselves,
Yes.
and maybe in that situation that lawyer is the best for you, but you need to check that they're the best lawyer for you, and not because there's another reason you've been directed to that person.
It would appear that's an Iberian thing then. So get a third party corroboration or a triangulation point, right, to make sure that is absolutely the right person to go with.
Yeah, exactly. I mean, I was speaking to someone recently. They're a estate agent, actually, and there's a sale going through, and both the buyer and the seller have used the same lawyer.
Yes.
They were just introduced to this lawyer, and you know what is going wrong? And this lawyer is like, well, I mean, they've been paid, so they've gone, underground. But who do they? There's a conflict of interest there as well. So um, I think it's important for someone to do your own research on who you're working with, and a lot of these factors that we mentioned today, aren't just specific to a financial advisor,
Hmm.
but regulation is key. The person you work with, or the company you work with, they have to be regulated. where they are giving you advice. Okay.
That's why I
So
wanted to clarify with you. That was one of my questions, actually. So,
yeah,
given, although you're working with Brits in the Iberian Peninsula, the
yeah.
regulatory body and authority is in Gibraltar.
Well, that's interesting. So for us, and this is where we have to mention our friend Brexit here, because that's made us is difficult for us as a firm, because you know us as a firm, and we are whiter than white, and that's how we work. So pre-Brexit, we are regulated in Gibraltar, and because Gibraltar at the time was part of the EU, they have they had the kind of single market, the common market, so we could what they call passport our services throughout the EU. All
Right.
we would have to do is say we're giving advice in Portugal one time, and then we got registered. We're giving advice in Spain. Brexit, us and UK firms and Gibraltar firms lost that right. So we had to come up with a solution. So for we are now regulated under a European network, and we had that regulation to operate and give advice anywhere in the EU. On a separate note, we remain regulated in Gibraltar, but that's for our Gibraltar-based clients because we have clients locally here. And we also regulated in the UK. So we're regulated, we're authorized by the FCA in the UK. So we can give advice to people in the UK. So for me, and again, this is biased because we're in the position, but if you're a Brit who's living in Portugal and you can operate with a firm who are regulated in Portugal and in the UK, it's the best of both worlds because,
Yeah.
okay, you're living in Portugal, but it's important those people understand, you know, both sides of your situation. Um, so yeah, that's where we are, and now we have the joy of dealing with three separate regulators. So anyone who's
Yeah.
worked in any form of professional services knows how taxing that can be. But it's important for us to be regulated because it protects the clients.
Yeah.
That's the key point. You are protected.
Excellent, excellent. If I can rewind a little bit more as well with this whole topic of choosing a financial advisor,
Yeah,
let's look at the scope of that and what that actually means, because ultimately your aim is to work comprehensively and holistically with wealth management of your clients.
yeah.
A lot of financial advisors are in for that just quick product kill, aren't they? So a financial advisor could be somebody who just sells you a one-off product, or it could be this holistic approach. Is that right?
Yeah, absolutely. And I mean, it's we occasionally have it, Carl. We could have someone who comes to us um, and I've had it before, and they said, "Look, I want to have the Spanish bond. This is, I've got, my pensions are sorted, I've got my property sorted, I've got my banks, but I just want the Spanish bond." And of course we can do that for them, but that's very rare because that person knew exactly what they wanted. For
Mhm.
us, it's looking at the overall picture, like someone should expect in the UK, to make sure that that's right for you. But it's a good point, Carl. I think there's a lot of advisors out there and they want to sell a particular product. So they know what they're going to give you before they've even spoken to you. So I think the key is, are they there to give you a solution or are they there to sell you something?
Yeah.
Because we always say one thing, okay, we're not salesmen, we're financial advisors. Me and Paul are terrible salesmen. You put us on the car lot and say, flog some secondhand cars. I think I would be out of that job in a week. It's just it's not my natural ability nor Paul's. We like talking to people, we like helping people, we like guiding through the process. But that whole, those people who can sell kind of ice to an Eskimo, that's not what we are. We're financial advisors. So we're looking for solutions. We're looking at the bigger picture. We're looking, holistically. And you never know when you might need your financial advisors as well. I had a WhatsApp message from someone last week, and he said, things are happening with my company. There's been a few layoffs. There's a takeover. I need to make sure I'm protected from my pension. So this is his pension that's run with the company. We don't manage it. We don't have anything to do with it. But we have that relationship where I can say, yeah, send me the stuff, and we can give you our kind of independent view on there. So it's always useful having someone, and it comes back to what we said at the start. that you can trust, and who is there available to help you.
Very good. And that the distinction then in that orientation of these different types of advisor are whether perhaps they are product focused or client focused. That's a key distinction, isn't it? Product focused would be trying to make a fee or a commission off a particular sale, hit and run style. And then client focused would take into account the whole financial wealth picture of that person's circumstances and advise accordingly.
Carl, I think that's the perfect way. You couldn't have put it any better. Yeah, that's exactly what it is. It's client focused and focused on someone as an individual and their circumstances. For us, a bit because the products we use are via a third party if we use these products. So we are agnostic about what we use. It doesn't matter. We don't receive a payment from these companies. We have no loyalty and agreement with them. We
Okay.
just want to use the right products for the right clients, and make sure everything is set up in the right way. And our investment advice we give, or our financial advice, is tax-led investment advice. So that's why we're looking for the right solution for each individual. And sometimes it may be that we can't help people,
Mhm.
and we have to accept that, and explain why that is. And I had a case recently actually, and somebody was looking to they had a sum of money. They sold their house in the UK, and they said, okay, it's sitting in the bank, getting barely any interest. I mean, a bit more now, but then not much interest. I want to do something with it. I said, okay, great. We can look. Blah blah blah. How much are you going to invest? Sorry, how long are you looking to invest it for? And he said, well, we're getting settled here, and we're going to buy a house in about 6-9 months, maybe a year. So we want the money back then. Um, I had to say, look, we want to help you, but we can't, because it's such a kind of short time period
Yeah.
that you need to look after that money. Whereas I've seen examples in the past where someone's done the very opposite. They said, yeah, invest it here, you can have your money back in a year. And by that time, that company's charged them high upfront fees. They're investing them, so there's a lot of risk to that capital because there's a short time frame, and markets are rocky. Markets can go down or up, and that's why we measure over a long period of time. And they probably had to pay kind of penalty to get that money back for
Mhm.
the sake of. So that's, yeah, it's very client focused. That's what a good advisor should be.
Very good.
They should explain everything to you. Everything should be in writing. They should evaluate different options, and they should explain to you why they are recommending that option over another option. Because it might be for the advisor to say, okay, we recommend you do this, here is the other option. And for whatever reason, that client may say, okay, I understand why you're saying this is a better option, but that is more, maybe kind of flexibility is more important than a lower tax rate, or things like that. So it's important to have your options. Yeah, they need the regulation, they need the knowledge, they need the experience. And an advisor needs to work with an individual. That's part of that kind of client focused approach.
Would I be right in thinking that it's okay to have robust conversations as well? Because what would be a great outcome from this podcast is to have somebody say, when people are shopping around, have you been listening to that Money and Finance for Expats podcast? Because that's where these questions have come from, isn't it? It's all right to put the person on the spot, isn't it? The professional on the spot. You know, you used the doctor analogy earlier on. It's
Yeah,
great to have a relationship with a doctor, isn't it? It's like, these are my preferences. This is what I think is happening.
yeah,
Tell me, doc, this is what I would like to do. This is what I'm thinking. You're obviously the expert. And be able to have an open and honest and robust discussion. That's got to be a prerequisite of a financial advisor relationship as well, right? Not to be scared to ask questions, or for them to make you feel scared when you ask questions.
yeah, yeah. No, it's very important. And I think it's again, it's in any kind of profession. We don't want to come across that we don't understand, or we sound stupid by asking questions. But there's no stupid questions. It's again, another an analogy is like when you go to the mechanics with your car, and they're saying, oh, we need to do this, you need to do that. And a mechanic will just fix your problem and do the right thing. But people have stories where people are creating problems so they can charge for a fix. So you need to ask, okay, what's wrong? Why this? So yeah, there's some questions. The fees is very important. How much am I paying you? And how am I paying you? That's very important. Okay. Are there any tie-ins or surrender penalties to where I'm being invested? Where is the money being invested? What regulatory protection do you have? If there's concern about that, just say to them, okay, can you confirm that you have professional indemnity cover? So that's very important, professional indemnity cover. And a good advisor can say, yep, we have indemnity cover, and they can kind of demonstrate that for you. I think it's important to know the answer to everything before you proceed. And if somebody's trying to rush you through the process, that's your warning sign as well.
Okay. Yeah, interesting. All right. And then again, that's an opportunity to say, look, I'm feeling rushed here. You want to have that level of, I mean, we're talking about, something very important here. So you need that level of transparency and honesty, don't you? I'm feeling rushed. It might just be me, but what's the hurry Murray here? And to have your advisor explain that to you.
Yeah, and very, very, very occasionally there might be a reason that they want to move something very quickly.
Yeah.
But probably very unlikely. But no, I think trust and honest communication is not only important for the client, but it's important for us as advisors as well. Speaking on my behalf, and I'm sure for Paul, but for advisors who work for other companies, our job is a lot more easier if we can be honest with the clients and they'll be honest with us. Because again, we want to kind of understand what people's issues are. Because if you don't understand what people's concern or issues are, then how can you give them a solution?
Yeah.
So we want people to communicate everything for us. And I always say to people, look, just be honest with us. And if you want to use another advisor, that's great. Just let us know and maybe explain to us why you want it, and then we can kind of understand, okay, what's going through the process, because you can't you can't win them all. But the trust is a key factor, and I think you can only develop that trust by feeling comfortable yourself and kind of asking those questions yourself as well. And I think from our experience as well, we're, as you know, we're based in Gibraltar. We of course travel to Spain a lot, especially since I live in Spain, and we travel to Portugal, but we're not there every single day. And we know there are advisors who have an office in Quinta del Lago or Cascais or Lisbon or wherever, and they have the office, and of course it's very tempting to say, okay, I can pop down and see those guys, and I know a lot of people like that, but in reality, the world we live in, you can, as long as your advisor understands where you're based and the tax implications and the regulation and the products, you don't need to be kind of physically down the road for them. We have Zoom, the good old fashioned telephone still, WhatsApp, Teams, StreamYard, which we're using. It's very easy to kind of communicate now from different areas, and I think that's something that's maybe overvalued. We get it that face-to-face conversations is better than anything, and when we take on new clients, we want to meet them face to face at least once in the initial, and then maybe the aim is, if we can see someone at least once a year, that would be good. Some people want to see us more often, and we make that effort. Maybe some people want us to see us less. I don't know what the reason is for that. Maybe they just don't like our faces, but we can accept that. But
we do, yeah.
Yeah, we're in a global world now more than ever, and especially kind of post COVID, and location
That's
is
really
less
interesting that
important.
you should mention that, because to onboard people, you're very happy to make that face-to-face journey appointment if necessary. But people don't need to make the pilgrimage, the journey to Gibraltar to engage with your services, which could be a very legitimate question for people. You can work with people all over the Iberian Peninsula and do that
Sure.
remotely.
Of course, yeah. I mean, we get people coming to our office. People like to come here, but then we go out on the road to see them. And Carl, if I'm truly honest, and somebody says to me, "Oh, I can come to Gibraltar, or you can come to Portugal and come and see me," that gives me a great excuse to travel down to Portugal. So
I
I'm
bet.
all for that.
It
So
could
no,
be a much worse territory, couldn't it? It could.
exactly,
Yes.
yeah, yeah.
Super. So, anything else we need to know? We are talking today about choosing a financial advisor here on the Money and Finance for Expats podcast. We've looked at quite a few of the key issues, and these are certainly things you should ask yourself in this process. And you would recommend shopping around, wouldn't you? What else do we need to know, or what should people know when they're coming to choosing a financial advisor, Matt?
I think it's, of course, it depends on people's kind of um, individual circumstances. I think it's important, if you're investing and you're using kind of stock market related products, it's important that you understand how because the majority of how it should be, the advice that you're given will be based around your risk profile. So
Right.
for those who don't know, a risk profile is basically an assessment of an individual, and it really should define how your investments are managed. So you get some people, and they will be classed as maybe assertive, aggressive. They like to take a bit more risk. It means their investments will kind of fluctuate more. You get people who are a lot more cautious, and then of course the people balance. So it's important to kind of understand that process as well. If an advisor is saying, "Oh, you sound like you're balanced to me. Let's tick that box," they're not really kind of assessing kind of your risk profile. That should be done independently as well. That's an important thing to be done, and um, it's I think I mentioned it earlier, but I mention it again that having having everything you need to know before you proceed in writing is very key.
Hmm.
It's the most important thing, and make sure that you have that in front of you and you can understand it, and it's kind of comprehensive, and it covers all your questions, because all financial advisors will or should issue a letter of advice before proceeding. That letter of advice should include everything that you need to know, also everything that you didn't even know you needed to know. So it should cover things like regulation, fees, you know, where you're going to be invested, what products are going to be used, why these have been selected, why that it's right for you, and things like that. And I think when you're choosing your advisor as well, you need to be selfish. You need to think, okay, what are these guys going to do for me? Are they
Okay.
just selling me this product, or are they offering me something else? Are they offering things like a cash flow analysis? Are they offering, you know, annual reviews that they can give me? How does that relationship work? When will they contact me? When can I contact them? Things like that. And the other key is if you are engaging with an advisor, are they going to remain your advisor once you're boarded, or will you be passed elsewhere?
Oh, yeah.
Um,
This can
because
happen, can't it, with professional
yeah,
services? You meet the head honcho, and the next thing you know, you're being dealt with by a junior, and you're not getting access to the person who you were impressed by in the first place.
yeah, of course, and we have a team behind us, and the advisors won't necessarily deal with everything, especially if it's something for a more admin nature. But what we do see is that you had the frontline guys; these are the salesmen. They're working on their commission. So they bring you on, they get their commission payment,
Mhm.
and that's how they're paid by the company. So that's all they care about. Understandably, they need to feed their family. So they get the commission, they bring you on as a client. What are they going to do next? If next week they have a choice of a meeting with a new guy or to review all your investments, who are they going to talk to? They're going to talk to the new guy, aren't they?
Yeah.
So it goes back to the commission and the fees, and generally what happens in that case is you engage with this initial salesman. you invest in the product, and then they kind of pass you on to a centralized department, somebody who doesn't really understand your situation. And again, if I'm here saying we're looking at kind of holistic advice and looking at the overall picture and guiding you through the process and continuing to be there for you. If I say all those things, but then I'm going to speak to you and then say, okay, yeah, then I'm passing you on to someone else, we'll never speak again, then I'm not following my word. So I think that's important. And it is good to engage with other people in the business. Absolutely. Because you don't want to be relying on one individual.
Yes.
But that initial person you've engaged with, who you've built up that trust with, you want to continue that relationship.
Yeah, perfect. Okay, great session today. This is how to choose a financial advisor and what to look out for in the process. Lots of great questions that you can ask people whilst you're shopping around. Ideally, add fiduciarywealth.gi to your list, and you're very happy to speak to people and for them to ask you these questions themselves, right? Having coached people on how to approach a financial advisor, you're happy to be put through this process yourself, and people get in touch with you, Matt, right? Or Paul?
No, absolutely. I mean, it would be a kind of interesting process if people want to come with us and ask, and we've opened the floodgates now, so we can't really say, oh, you can ask all the questions, but not that one. As long as it's not too personal, Carl. But
Yeah, fair enough.
no, I mean, we invite that, and I don't know. Hopefully maybe this message will kind of resonate with people out there who already have their investment set up, or already done something. And if anything that we say triggers something that you're concerned about, we do offer a free review service.
Okay.
So we could look at your setup, and then we could say, you know what, they've set this up well for you. Peace of mind. We've given our second opinion. You don't need to worry. It could be on the other side of the scale and say, look, actually, they've done this. This is something that you need to resolve, and these are sort of the kind of warning signs that we've been talking about. So I think those already in Spain, Portugal, Gibraltar, or even those in the UK, if anything that we say does resonate and concerns you, you just want that kind of peace of mind, they're more than welcome to reach out and say, yeah, I'll take you up on your offer.
All right, that's fiduciarywealth.gi. That's how to approach the company. And another piece of advice that I've heard you give before, which I think is really important, Matt, is sooner rather than later, rather than leaving it. And especially getting things set up right when moving from the UK to the Iberian Peninsula. Reach out soon rather than overlook it, delay things, and end up regretting it later on.
Exactly. Yeah, exactly.
Okay. Is there anything else you want to mention, or should we leave it there? We'll be back, of course, next week. But is there any final points? A final word from you?
No, I think we've covered everything in a quite a kind of comprehensive manner. No, I think that the message kind of remains that has been through the podcast today.
Okay,
Just
superb.
treat your financial advisor like your doctor. Maybe that can be the catchaway. Yeah, question them, but trust them.
But unlike a
Eventually,
doctor, you can borrow their pen. Excellent.
and our writing is a little bit better than a doctor's anyway. So yeah,
You might even get a nice free complimentary pen as well.
yeah.
All right, superb. Thanks, Matt. Have a great week. We'll see you next week.
Thanks, Cole. Have a great week, everybody.
Ciao, ciao.
Bye bye.